slide, we'll talk about who is People's Capital Group, why we help people invest in real estate, and how we've been doing this for about 10 years. We'll talk about our process of finding mismanaged apartment buildings and repositioning them to create wealth and cash flow for our investor groups. And we'll talk about Seth Martinez and I, my business partner, how we got started here and why we started People's Capital Group about 10 years ago. And we'll also talk about the process to get qualified to invest if you feel like our investment goals may align. Here to the right, this is a picture of a property we're trying to place under contract right now. Just gives you a beautiful courtyard here. Great example of the type of kind of slightly mismanaged apartment buildings we buy for discounted prices and improve for our investors so they make consistent cash flow and build wealth. And they can do that with a self-directed IRA or invest cash, but that's what we focus on doing here at People's Capital Group. So let's break right into it. How to self-direct your IRA into real estate. So the first step here is to select an IRA custodian for your goals. All right. There are plenty of IRA custodians out there. You really have to select the right IRA custodian for your goals. And there's actually an individual I know named Alan Johnson who can help you select the right IRA custodian. He's created a software where you can punch in your investment goals and your timeline, the amount of capital you're looking to transfer through your IRA. And it will help guide you in the top, dozen or so IRA custodians that should fit your goals, because there are dozens of them out there. They all pretty much do the same thing, but they do have different rules and regulations and different fee structures as well. So you'll want to shop around a little bit and find the right IRA custodian for your goals. Once you do that, create an account with that IRA custodian. That's usually very simple. Takes maybe just a couple of days. Some can even do it right online in about 15 minutes. And at that point, the custodian, number 3 here, will request the amount of capital you're seeking from your current IRA holder. So let's say your IRA is currently with Fidelity and you're going to sign up with Next Generation Trust IRA Custodian. So you're going to start an account. Maybe you go with Alto IRA because you don't want to talk to anyone. You just want to do it right online. You're going to start an account and you're going to tell them where your current IRA is being held and how much you want to transfer from your current IRA holder. That transfer will then be complete by the IRA custodian. That takes about 5 to 10 business days, depending on who holds your IRA and the custodian you've selected to work with. Not all custodians are created equal. Some are fast, some are slow, and doing your research will help you determine the right one for your goals. Once your IRA is self-directed to the IRA custodian, you're going to then submit the real estate investment docs to the custodian. All right, for an investment such as ours at People's Capital Group, we're going to offer a private placement memorandum, an operating agreement, a subscription agreement, an offering memorandum. And all these documents have to be IRA friendly, or they have to align with the IRA's goals and restrictions. And we make sure our documents are going to be approved by IRA custodians, because sometimes they have to have specific wording in them and things like that to allow IRAs to be invested in the fund. We create a fund that is IRA friendly. So once your IRA custodian reviews those documents, they'll ideally sign off on them. You're going to actually initial, most likely, next to where your IRA custodian will sign. And then your IRA custodian will wire the funds to the operating account for the investment opportunity. And then as that investment creates cash flow and big lump sums upon the refinance, which we'll break into later in this presentation, how that works, those checks go back to your IRA custodian. Okay, it's not a way to pay yourself outside of the IRA or cheat the tax code or pull on your IRA early, but it is a way to build your IRA faster, take control of it, improve inner city areas. We'll talk about that in the next few slides as well. All right, but let's say, you're an active investor or you want to try to do a couple different things with your IRA. You're going to flip a property because, well, you've watched a lot of shows about flipping properties and that sounds fun to do, but you also want to invest passively because you're wise enough to know that the first time you embark on something, there may be headwinds and mistakes, and investing part of your IRA with professionals is probably a safer bet. You're going to do a little bit of both. So in this case, you may want to start an LLC that's owned by your IRA, also known as a checkbook IRA account. Okay, there's different terms for it there. So this is for people looking to be a little more active with their IRA. And because of this, if you're flipping a property or something like that, and you need to pay the contractor or the landscaper or the plumber who ran out there in the middle of the night because of a leaky pipe, well, you better bet these service providers and contractors in general are not going to want to wait for their checks. See, most of the time, IRA custodians are going to have about a 5 business day processing period, and they're going to mail out the check. They might charge you $5 to $15 to do that. So to avoid those fees and that delay in accessing your IRA funds, you want to actually open an IRA, checkbook IRA account here. Now, here's the process. So first of all, you want to start an account with an IRA custodian that is checkbook IRA friendly. That means they understand you're going to create this LLC that's owned by you and owned by your IRA and managed by you. Sorry about that. And they are friendly to this. They will allow you to move your IRA into the custodian and then into this LLC. Okay, some IRA custodians don't allow this, and obviously you don't want to work with them if this is your intention. So once you select that IRA custodian that is checkbook IRA friendly, you're going to then create an LLC that is owned by your IRA but managed by you. Now, you'll need a specific operating agreement to do this. And in fact, we've offered this operating agreement to individuals that are investing with us here at People's Capital Group. So if you're interested in this process and you are seriously considering investing in People's Capital Group, then you want to contact us. We can actually give you a editable version of that operating agreement that will allow you to create this LLC that's managed by you, but owned by your IRA. So when we're going to sign the proper LLC operating agreement at that time, and then you're going to move the capital to your IRA custodian, right? Start an IRA custodian account, just like we did in the last slide. The IRA custodian is going to contact your current IRA holder. The funds are going to move, the elected amount of funds are going to move to the IRA custodian, and then the IRA custodian is going to move that into the LLC account created for this LLC that's owned by your IRA and managed by you. Now, this is not a way to pay yourself a management fee or buy a vacation home and have your family live there for free or send your kids through college. There's still restrictions on what you can do with your IRA, whether it's self-directed through a custodian or self-directed into an LLC operating account that's managed by you but owned by your IRA. It's not a way to get around the IRA regulations, but it is a way to have real full control of your IRA. And if that's one of your intentions, that's one of your goals, then you're going to want to take a look at this extra option. Now, if you just want to invest passively in real estate with People's Capital Group or a real estate syndication of your choosing, then you really don't need to take this extra step here. See, in this case, you need to police yourself. So you also have to create the LLC. And you have to make sure you don't go and get a Home Depot credit card for this LLC, because that would be debt that is guaranteed and recourse debt. IRAs can't take on recourse debt. So that's just an example there of what you can't do with this LLC operating account. So you really need to know what you're doing and what you cannot do, more importantly, with your IRA if you're going to take this extra step. Now, this is not at all necessary. Most investors don't take this extra step. Most simply select the right IRA custodian for their goals and then start the account, and then that fund moves to the IRA custodian and into the investment opportunity that is elected by the IRA holder. So that's how most people do the self-directed IRA, but this is an extra step you can take if you're, say, flipping houses or doing something where you're going to need the money quickly, readily, consistently. See, with a real estate syndication, you're essentially sending one check and that's it. It's a one-time transaction, and then we're going to send those checks back to your IRA custodian. When you're flipping a house, you need access to that money quickly and regularly. So that's why you're going to start an LLC in that case that's owned by your IRA and managed by you. Of course, you don't have to do this if you're flipping a house with your IRA, but it's suggested if you're going to need access to the funds often. By the way, here's a picture of that building we're purchasing with our fund right now, a nice, beautiful 63 unit in Trenton, New Jersey. So if you want to learn more about that, you can check us out at peoplescapitalgroup.com and click to register to invest, and you'll be able to review that opportunity there. So let's talk about a solo 401k to self-directed IRA. So a lot of people have a solo 401k and they ask me, Aaron, what can I do with a solo 401k? How do I self-direct it into one of your opportunities? It's quite simple. You're going to work with an IRA custodian to get this done. They're going to really guide you through the process, but I'll give you a quick summary of how it's done right here. So you can use 401k funds to invest in real estate if you can roll the funds out of the plan and into a self-directed IRA account. Again, you're going to start that with an IRA custodian. They're going to guide you in this process. Your solo 401k or self-directed 401k, kind of similar things, or IRA is prohibited from engaging in transactions that benefit you or your direct family, your heirs, or your business. Okay. So you want to recognize that there's restrictions on what you can and can't do with your solo 401k, your self-directed 401k, your self-directed IRA, and those apply to the 401k just like they do with the IRA. Essentially, what you're doing here is you're transferring your solo 401k into a self-directed IRA and then moving into an investment opportunity. So you're going to do the same thing, but you're going to explain to the IRA custodian that you have a solo 401k and you need help maybe consolidating a number of different 401ks into one and then self-directing that into the IRA custodian. Once it's with the IRA custodian, then you can simply move it into an investment opportunity, just as I explained before, where the IRA custodian is going to review the opportunity, sign off on it, and you'll initial it, and it'll be moved into that opportunity. And the profit from that opportunity is going to go back to the IRA custodian. Same process here. Okay, you're just going to work with that custodian to kind of turn that 401k into a self-directed IRA and then move it into nice, profitable real estate. Like you see here on the right here, more pictures of this building we're buying, just a beautiful kind of colonial style building. It was converted from an old cigar factory in the 80s into loft style apartments, tall ceilings, winding staircases, full parking garage, tons of value add. Rents are 30% below market value. So we're going to go in there and improve the property, get better performance out of it, and then do a cash out refinance for our investors and also create cash flow for them as well. So we'll break into that a little bit more in the presentation here. So let's talk about why to self-direct your IRA into real estate. Well, you want to hedge against the stock market. Most people have 100% of their IRA in the stock market. Now, I understand you can be diversified within the stock market. Heck, you can even be in a real estate investment trust. That's a REIT, that's a stock backed by real estate. So you can kind of own real estate in a sense, but that's not true ownership of real estate. That's actually ownership of stocks, and stocks don't offer the tax benefits that true ownership of real estate offers. But the main reason people self-direct their IRA out of the stock market into real estate, or just self-direct their IRA in general, is to hedge against the stock market, build long-term wealth, earn that cash flow as well for their IRA, grow your nest egg faster than traditional investment options. A lot of IRAs tend to be in conservative stock positions that don't grow very aggressively. We just returned a 24% annualized cash on cash return to our investors. Prior to that, we did another cash out refinance on another syndication we have, and that produced about a 16% annualized cash on cash return to investors. So we don't target that off the bat. We target about a 12% annualized cash on cash return on most of our projections whenever you're looking at an opportunity with us. But we tend to be accomplishing 1.5 to 2 times initial targets. So just a great example of how you can grow your nest egg much more aggressively, much faster by investing in real estate with the right professionals who are going to buy mismanaged buildings for a discounted price, improve them, and create more value for our investors. And that's how you create wealth in real estate and cash flow over time. And that's why we do that structure, that strategy in real estate. Also, take control of your retirement account, right? There's something special about taking control of some of your IRA, right? You don't want to move all of it out of the stock market, but maybe 33 to 50% or so of your IRA out of the stock market into professionally managed real estate. And really feels good to take control of your retirement account and build that more aggressively and make a difference in inner city areas. See, we invest in this building, for example, is in Trenton, New Jersey. We invest in Newark and Patterson and Jersey City and all different types of inner city areas throughout New Jersey. And it really allows people to make a difference in a lot of these inner city areas. Maybe you grew up outside of Newark or Patterson, and you know these cities, you know the challenges they've been through, but you've also seen them flourish over the last decade or so. And you might think, hey, I want to get in on that because people are making money in downtown Newark. And we made our investors millions in Newark and Patterson. So very good cities to invest in. We continue to invest in inner city areas. We continue to invest around the cranes in the air, which we're now seeing in Trenton, New Jersey, and also Patterson as well. So we continue to really enjoy investing in inner city areas, and people love seeing that difference made. Even if it's just that one building, that one block you're invested in, that still makes a difference. Finding a mismanaged property that maybe was owned by a slumlord previously, and now improving that management and bringing those opportunities to our investors so they reap the benefits of that improved asset. And that's really nice to see in these inner city areas. Improving that city one block at a time is what we do here at PCG with the help of our investors' capital. So number 7 here, it's affordable. It costs about $250 or less to start an account. Number 8, it's easy as well. You can do it right online. A lot of these IRA custodians do it right online. I can suggest a number of IRA custodians to you. If you want to learn about that, you go to peoplescapitalgroup.com, or you can also email us at info@peoplescapitalgroup, and we'll let you know some suggested IRA custodians we work with. So here's a little bit more information about People's Capital Group. Who are we, and what's our mission here? So we help people invest in real estate to create long-term wealth for themselves and their family. So we're very focused on legacy wealth here. We have a long-term option where you can invest indefinitely with us and pass down that legacy wealth to your heirs. We don't want to get rid of you here, where a lot of real estate syndications are going to be in and out, selling the building as soon as they can. We have a long-term view of real estate. We have an in-house property management company that allows us to keep very good control of our assets and get better performance out of them for our investors. We also have been around since 2013 here. We've helped hundreds of people invest in real estate, and about 90% of our investors reinvest over time as well. Right now, we have about $20 million in assets under management. We've completed over 250 real estate transactions, Mr. Martinez, my business partner, and I. And we focus on really helping people invest locally here in the New Jersey market, although we also work with people all around the country that enjoy investing in this high-demand North Jersey market, one of the best and strongest markets in the world. And that's what we focus on here at People's Capital Group, repositioning apartment buildings, and that builds maximum cash flow and wealth growth for our investors. It's also completely passive as well, as they enjoy monthly updates and quarterly financials. So let's break into the process. What does it mean to reposition an apartment building, right? So here's how we do it. First, we find a great deal, a mismanaged apartment building in North or Central Jersey with rents 25, 30% below market value. For example, the building we're buying in Trenton right now, there's a gym that's being used to hold construction material. It's got 4 saunas, his and her locker rooms. It's being used to hold drywall for the owner. That could easily be turned back into a gym and make a nice amenity for our tenants there, and also attract better quality tenants in the future. Also, the units are leased about 30% below market value almost. About 36 of the 63 units we plan on renovating once they're vacant and leasing up for top dollar. We'll also improve the common area and find out more ways to make income on the property, maybe through parking or storage or laundry, and tighten up our expenses as well. Keep an eye on that payroll, maybe do a tax reassessment. So we physically renovate the units as they become vacant. We lease them up for top dollar. We do all the other things I said as well into the building to improve the value of it, okay? Obviously, before we buy the property, we complete multiple levels of due diligence on the property to make sure it's a safe investment. We'll look at hundreds of bad deals to bring our investors one well-vetted opportunity so that they know they're investing in a strong asset long-term with good management in place, as well as we're going to improve the property management with our in-house property management. We're going to secure the financing to leverage our investors' capital. That allows us to get good terms in the financing as Seth Martinez and I secure the financing so our investors don't have to. And then our investors, people, they bring in the capital, hence People's Capital Group. Investors will own a small ownership piece of the building, and they'll bring in anywhere from $30,000 to millions of dollars with us. So we work with small investors and large investors alike, sophisticated, non-accredited investors, and accredited multimillionaire investors as well. So we kind of pride ourselves on working with both people getting started investing in real estate and experienced wealthy individuals also. So either one of the spectrum works for us. We can work with both. Once we own the building and our investors are invested, we're going to reposition the building through all the avenues I just talked about, increasing rent roll, renovating units and releasing them for top dollar, figuring out more ways to make income on the property as well, and lowering our expenses. As we do that over time, investors earn cash flow on a quarterly basis. They also enjoy monthly updates, quarterly financials, annual K-1 tax returns, giving them tax depreciation. And then every 3 to 4 years, we aim to complete a cash out refinance. And this gives the investors about half of their investment capital back, but it doesn't dilute their ownership or dilute their principal investment. The investors have the option to exit at the refinance, get back their initial investment, keep the funds earned from the refinance, keep the funds earned from cash flow, or like most of our investors do, about 90% of them, remain invested. You remain invested. That means you keep earning the cash flow, keep earning the refinance every few years. If you exit the investment, you don't keep earning the cash flow. You don't keep earning the refinance every few years. Sorry about that mistake there. If you exit the investment, another investor will buy out your ownership for your initial investment amount. So say you made a $100,000 investment in a property. 3 years go by, we're repositioning the building, building the cash flow, building the property value. We're going to do a cash out refinance around year 3, let's say. That's going to allow you to get $50,000 back of your $100,000 investment. You can then exit at that time. Let's say you made $5,000 in cash flow. So between the refinance and the cash flow, you've made $55,000 in profit. You want to sell your initial investment amount, exit the investment. So you're going to get back your $100,000. So you walk away with $155,000 from your 3-year investment there of $100,000. And at that point, the IRS would ask you to pay capital gains tax on the earnings. If you're doing a self-directed IRA, you defer all those taxes. But let's say you want to keep building your wealth, keep earning quarterly cash flow and big checks upon the refinance. Well, then you're going to want to stay invested. And that's another option for our investors that most investors opt to do. We're going to aim to refinance every 3 to 4 years, and eventually down the road do a 1031 tax deference, trade into a bigger building, build legacy wealth indefinitely for our investors. And we want to keep you around because we have a long-term view of real estate. Most people reinvest their earnings over time with us as well. And we invite you to stay invested indefinitely with our projects as they continue to build wealth over time. And North Jersey is a great market to remain invested in long term. Also, with the 1031 tax deference, we can defer all taxes and trade into bigger properties, build more wealth for our investors, and just continue to build legacy wealth indefinitely for them and their heirs. And then, of course, you have the option to reinvest those earnings over time. Every refinance, you'd expect about half of your investment back, and you can reinvest that in new opportunities as they become available, which most of our investors do, because historically, we've achieved far better than our targets, about 10 to 100% greater than our initial targets. So we really try to underpromise and overdeliver. And because of that, 90% of our investors reinvest over time. So that's how it works. That's how we reposition apartment buildings, whether you're invested with cash or a self-directed IRA. It really doesn't matter. The returns are all the same. The tax benefits, of course, are a little bit different, but the bottom line is it's a tax-free investment overall. It creates no additional tax burden if you remain invested long-term with us. And that's the whole strategy. It's a tax strategy really at the end of the day, and a great way to build wealth also. Here's the founders of the People's Capital Group here. That's me on the left, Aaron Fragnito. I'm more in charge of client relations, marketing, and branding. And I actually started as a real estate agent in 2010, many years ago. I actually sold Seth some of his first properties in real estate here in New Jersey. Seth Martinez runs the other half of the company. He manages operations, oversees due diligence, and the property management overall. He also sold a medical billing company in 2008 and transitioned into real estate around that time. He had the capital. I had the deals. We made a great team. We started buying real estate for good prices, renovating it, refinancing, and raising capital beyond that. And over time, we've fixed and flipped over 50 houses. We've wholesaled over 100 properties. We've done 9 real estate syndications. We've sold apartment complexes. We've refinanced them. We've done lots of different types of transactions, mixed use, commercial, multifamily, residential. So really have a breadth of experience in real estate, tax liens, subject to the whole thing, really focused on all different types of acquisitions, short sales, REOs, distressed, private sales. And we've had a good breadth of experience here overall in real estate. So people really like that about us. And my monthly updates are very in-depth as well. So I send out monthly updates to our investors, and they tend to learn a lot from it. And in fact, they've said they've gotten a ton of information and education from our monthly updates. We don't sell boot camps. We don't sell books or CDs. We don't try to educate. We do try to educate. We don't sell education. So we educate through our monthly updates, through our website, but our main goal is to help people invest in real estate passively and build their wealth, whether it's through a self-directed IRA or just investing cash in our opportunities as they become available. So why People's Capital Group? Well, to date, we've raised $10 million, and $4 million actively invested with $5 million returned to clients in full. We underpromise and overdeliver. We historically have performed better than our initial targets by a good amount. Our in-house property management company allows us to have close control of our assets and get better performance out of our projects and our contractors. We also have very good local market knowledge that allows us to bring that to our investors, and our years of experience investing here, our relationship with brokers and landlords and wholesalers and contractors allow us to bring that infrastructure to our investors so they feel confident investing long-term with People's Capital Group. Also, we pride ourselves on helping both accredited and non-accredited sophisticated investors participate in our fund. So most real estate syndications only accept accredited investors, meaning you have to have a net worth of $250,000, not including your primary residence, or make $250,000 individually or $300,000 household income. Now, if you didn't make that cut, you couldn't invest in a real estate fund, and most funds don't accept sophisticated investors, which we do. Now, sophisticated investors are non-accredited investors. They're not yet accredited. They're working to get there, but they understand the investment opportunity. They have some experience reviewing similar investment opportunities, and they don't need to live on the returns of the investment. Okay, they have the mental capacity and experience to understand the risks of the investment. So as long as you meet that category as sophisticated investor, which opens up the door to a lot more people, you would qualify to invest with us, and you can learn more at peoplescapitalgroup.com, where you can click register to invest, and that will start the process of getting qualified to invest and scheduling a discovery call with me, Aaron Fragnito, and getting qualified to invest in our fund. It's quite easy and really just a couple steps. But here's how we help people invest in real estate. So we make real estate very attainable with a minimum investment amount of only $30,000. Some people have millions of dollars with us. Some people get started with a minimum investment of $30,000 to try to get invested in every project as they become available. And that starts producing nice, consistent cash flow and wealth growth and large checks upon the refinance for them over time. Our minimum investment period is 3 to 5 years. You can also invest indefinitely. There's no maximum investment period, so you can keep your money working, which is great for IRAs. Larger investments are rewarded with a better share class, along with a stronger return on investment. We are IRA or solo 401k friendly. We accept self-directed IRAs. And of course, we do the cash out refinance strategy, which allows for a large tax-free payout to our investors every 3 to 5 years. And that's the main strategy. We buy, renovate, refinance, repeat. And that is our strategy here at People's Capital Group. And that's why 90% of our investors reinvest with us over time. So go to peoplescapitalgroup.com. You can check out all of our content there. We have testimonials, historical performance, an ebook, podcasts that I do weekly, webinars that come out pretty much almost every week as well, and past webinars there also. So this webinar was about how to self-direct your IRA or solo 401k into real estate. We talked about how to start that self-directed IRA account by selecting the right IRA custodian for your goals, how they're going to guide you in that process of self-directing your IRA or solo 401k into real estate, and how we are IRA friendly here at People's Capital Group. We also talked about how we reposition apartment buildings. We find mismanaged buildings for discounted prices, improve those buildings so our investors enjoy the returns and the benefits of investing in real estate without having to do all the heavy lifting behind the scenes. You see, it's an immense amount of work to buy these properties for great prices, find these incredible opportunities, execute on the improved management, and reposition and refinance them successfully. We've been doing this for years. We've also learned along the way and built an infrastructure, and I know how hard it is. So that's why we created People's Capital Group, and that's why most of our investors reinvest over time. We also really underpromise and over-deliver. Now, with our in-house management company, we keep tight control of our assets, and by accepting sophisticated non-accredited investors, we've opened the door to more investors now than ever. So if you're still on the fence, if you still want to decide if investing in real estate is right for you, and if People's Capital Group is the right group to you to build your wealth with long-term, go to our website, peoplescapitalgroup.com, enjoy our content there. And when you're ready, click the button that says register to invest. You can then sign up on our Syndication Pro site there, schedule a discovery call with me, Aaron Fragnito. We're going to talk for about 15 to 20 minutes, talk about your investment goals, make sure you qualify as sophisticated or an accredited investor, and then we'll talk about what we have coming up if you're qualified to invest. So that all starts at peoplescapitalgroup.com. You can schedule your discovery call there. You can fill out a basic application. You can fill out even a more depth application as well and get qualified there at peoplescapitalgroup.com. So I hope we can build our wealth together. I hope you enjoyed our presentation tonight. If you have any questions, please type them in the Q&A there, and we'll have someone answer them quickly. Thanks a lot. Have a good night.